Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Hello, it's Tim Neary here. I am editor of sister publication, actually, of Smart Property Investment, Real Estate Business. But we'll be hosting the Smart Property Investment Show today in the place of regular host Phil Tarrant, who unfortunately is away at the moment. Now, joining me on the show today is Luke Moroney. Luke is a full-time, well, I say a full-time, he's actually a long-time and big portfolio property investment. Hello, Luke, and welcome to the show.
Thank you, Tim. Thank you for having me.
Now, we were just chatting very briefly off air. You said to me that you've got 30 properties today. I assume that they didn't just appear overnight, and I'd like to go back to the beginning and talk a little bit about where you started out, how you got started, and what that first little step looked like when you started property investing.
Yeah, definitely these things don't happen overnight, and first and foremost, it requires a bit of patience and building that portfolio over time. So when I first started in property investing, there was a thought around, from my parents to think about wealth creation. And I really didn't know too much about the property market or any, I had no skills, knowledge or any experience at all. And I went out to the western suburbs of Sydney because it's close to where I lived. And I bought an investment property, and it was a struggle. I bought that at the peak of the market. It was back in 2002. And for about 8-9 years, there was no growth in that property. On top of that, I tried to manage those tenants on my own, and all the classic stories of tenants causing damage, not paying rent, and all those horror things you hear about. And I think the big thing about it is, even though I did make those mistakes early on, I held in. And I think that's where maybe some property investors get it wrong. Even if they do make mistakes, is they look to get out straight away, take the losses and never get back into the market.
Now, you mentioned when you started out, you said you had patience, and I just want to tell the listeners that you're sitting across the way from me, you've got a nice black T-shirt on, and it's got in bold across the top of it, patience. Now, I don't know if that was meant to be like that today, or if that was just fortuitous, but I think it tells a good story.
Yeah, absolutely. And I think I think in many areas of our lives that we got to focus on that and not think about those quick wins all the time, and think about things that come good often come with patience, and you get those in the long term from putting all that hard work in. But realize that it's not a quick win. It's grow that over a period of time. Let's
talk about the hard work, and let's talk about some of those lessons that you learned early. You said you got that first investment property, and you had sort of tenants from hell that came in. Give me a big nod there, which tells me I'm on the right track. What did that look like? How bad did it go, and what lessons did you learn from those early tenants?
Well, you're always thinking in the back of your head that you're constantly losing money, or people aren't paying you for an investment, and why that is, and trying to get an understanding behind it when you're only 24 years old. And I'm probably a little bit different from the times now where more and more people are getting into investments. But back in early 2000s, there wasn't like the extent of as many property investors around then. I didn't know too many property investors in and around the circles of friends and family members, so it was hard to take. And having constant problems with, holes in walls, and with, tenants not paying, and you're always questioning about your ability. Have you made the right decision? What am I doing? Should I just put my money in the bank and just let it sit there and just keep working hard at my job? So, a lot of those things crossed my mind during those times, definitely.
And it is true, isn't it? I mean, like today, this concept of property investment, or the industry of property investment, I'll call it, is a lot more established than it was, as you said, in 2002. You were 24 years old. You probably didn't have as much life experience, obviously, as you have now today. So some of those questions would have come up in your head. Am I doing the right thing, as you mentioned? How did you answer those? How did you go from being in that position of, can I say, doubt, to where you are today? Today you have 30 property investments.
I think just in the back of my head, it was all about, hearing those probably cliches from the past that, they're not making any more land. So just be patient with it, and over time, property will grow. So even though I made some errors and didn't really know what I was doing, eventually that property did grow. So that was ringing in the back of my head on a constant basis. Just be patient with it, even though I, didn't really know what I was doing at the time. But it was just keep that focus going and just allow it to grow. It will grow. The capital growth will get ahead of me for what knowledge I knew back then. And that's what I really focused on at the time. Now it's just completely changed. The whole thinking behind what I'm doing, the reasons for it, the knowledge, the skill, the experience have definitely increased. And, I'm in a much better place now as an investor to when my first property was bought.
Let's talk a little bit about that, where you are today, and perhaps start from that beginning. I'm assuming, and correct me if I'm wrong, that even back then at the 10 to 16 year ago period, you had in mind where you wanted to go. You were thinking about long-term gain with that first property. But you said today you're very different. What does your philosophy around property investment look like today compared to what it was like back then when you started?
I guess it was what people normally hear when it comes to property investing is just buy and hold forever. That was the thesis for me when I first started. Now I'm looking at investments where I want to see the growth in the next 3 to 5 years. And I want to make sure that, that within the portfolio, for me as an investor, it's a balanced portfolio and I can pay the expenses. I can pay the interest on the mortgage. I can pay for the property manager and so forth. And I'm not going to be in dire straits if something happened or if there's an interest rate increase or if anything's going to happen in the next couple of months or years or whatever. I just want to be protected. So having those properties that I'm purchasing that are going to grow in the next 3 to 5 years minimizes my risk.
Sounds like there's two things that might have changed. One of them is that when you started out, it was like set and forget. Now I'm a property investment, this is it. And today you're thinking more about, I'm a property investor, but now it's not set and forget, it's set and manage it regularly and have a look at that. You mentioned the word balancing of the portfolio. So which ones are doing what in terms of what you want them to do in the portfolio. And the second one is also, it sounds a little bit like now you understand that spending money on the portfolio and managing a professional team is part of the deal. Whereas it sounded like when you started out, perhaps it was like, get it, but just keep the expenses to absolute bare minimum.
I think the word that came up for me when you said that was active. So be an active manager of your portfolio. It is a business. Remembering that it is really important to keep up to date with what's going on. And then it's not only sort of manage your portfolio, but more importantly, manage your team that you're working with. So be in constant contact with them, making sure that they're taking care of the tenants or your mortgage broker's taking care of your loan, or you need to adjust things or reset mortgages or refinance, whatever it might be. So to give you a couple of examples of how, someone actively manages their portfolio.
Let's explore that a little bit more. What does being an active manager of the portfolio look like on a day-to-day basis or on a week-to-week or a month-to-month basis? And then also let's have a look at your professional team and what that looks like today, perhaps how it's grown. Let's start with understanding what an active manager looks like.
Look, I don't think it takes a hell of a lot of time, and maybe for me as someone who's grown their portfolio, it's just become a way of life for me. So I don't mind getting on the phone and having a conversation with my mortgage broker or my property manager. I think, on average per property, I probably spend somewhere between a half an hour and an hour a month on. Probably not even that. Maybe it's 15 to 30 minutes more likely. And, and that might be a check-in with a property manager. That might be assessing your finances, but on multiple properties at the same time. So if you have 5 properties or if you have 30 or 50 properties, it probably requires maybe about very similar amount of times to manage it. So. And then in terms of your second question about building the team, I think it's just crucial for everybody. If you're running a business or if you've got other things you're doing in your life, you want to have people or experts that are going to help you along the way. I think the commodity that we keep forgetting about is time. And in terms of our lack of time, you've got to think about using other people to help you out with finding properties, finding loans, minimize the amount of time that you're spending on actively managing your portfolio and put in place other people who are actually doing this on a daily basis. They're in there for a reason. They've got the experience, and it kind of puts a little bit of like what I like to say, like an insurance policy on it for you of having experts doing this who are working on it every single day.
It does take the anxiety out of it sometimes when you've got those that you say that are experts that deal with it every day, putting their expertise into it, because sometimes there's little tricks and balances that can go wrong, and
Yes.
they can impact. They can have quite serious impacts. What does your professional team look like, and how do you prioritize those professionals within the portfolio?
I think every single person is important. So to prioritize, but you're probably looking for property managers, solicitors, accountants, and it might be multiple of each one. So one accountant will work better in one situation as opposed to another, and same way as solicitors. You might, and obviously laws regulate this as well. A New South Wales solicitor may not be able to operate in Queensland, so you've got to do those checks on those particular people. So it might be multiple people in the same industry. So moving on from that, so property managers, accountants, solicitors, you're looking at buyer's agents or someone to source out the property for you, because it's really good to get that on the ground truth. And I think that's, I guess the buyer's agency is probably, you're looking at number one, and I'm probably a little bit biased in that regards, but someone to source out that property for you is crucial to your success.
And you talk about being a little bit biased. I know that you are these days a property buyer yourself and moved into that, which probably makes a lot of sense, having all the expertise that you've gathered in building this over the last 16 years. For that on-the-ground truth, I like the way that you term that on-the-ground truth, very important. Before we get to that, just the role of a mortgage broker in your portfolio and the role of an accountant, how important are those two functions, I guess?
Both crucial. Every member of the team is crucial. But in terms of the mortgage broker, constantly checking in with them in regards to what the portfolio is looking like, how you can best strategize yourself. There was a period of time, 3 or 4 years ago, talking to my mortgage broker where I was able to get an assessment on maybe 2 or 3 loans at a time, and it was really bolstered up my portfolio of having that expertise around me at that particular time, because them pushing me a little bit to say, yeah, I really want to get the next property go through, and they said, well, how about you try and get 2, and then maybe even try for that third one when the first one goes into the point of, get the pre-approval done, and then get the next one for request for pre-approval. So it's really, having that accountability, as well as also, looking at where they've got the team around them. They've got, BDMs that they work with, business development managers, I should say, to take away the acronym, but people that they work with on a constant basis, on a daily basis, that I'm not going to have access to. So using those experts is really crucial. And in terms of the accountant, I feel that working with an accountant who has a property portfolio or someone aligned with investments on a daily basis will definitely help property investors move forward and, maximize their deductions that they can get on their building their property portfolio, and then sort of sourcing out other ideas on how to manage that best way with your property portfolio moving forward.
I mean, you're talking about ideas. You're talking essentially about the accountant, but I just want to go back to what you're talking about with the mortgage broker and ideas. I really relate to what you're saying about working with the mortgage broker and having that leverage. I'm just in the process of looking to buy something and trying to establish what my buying capacity is, my borrowing capacity is, and without going to every single lender and presenting my credentials, just going to one mortgage broker who then has access to all of those lenders is taken a giant chunk out of the step and made it a lot easier for me and put me in a much better position in terms of knowing where I am and what I can do, what capacity I've got.
I go back to the word time, right? And that's where all these professionals, when it comes to property and probably other parts of your life, whether they step in. People don't have, I feel a lot of people don't have an emphasis on their own time. They'd rather try and do something on their own and spend hours and hours and hours, and they don't put a value on their time. And I think that's where what you're talking about in terms of what a mortgage broker does is evaluate, 30 different loans at the one time, and put you in a perspective of getting the best deal, as well as minimizing the amount of time that you spend. You can go into 4 different banks and spend 4 days on doing that exercise, or you can go to a broker and probably get an answer in 20 minutes. So time is not only on your own personal time, but the efficiency of time, because you've got to think also in terms of, if it takes you 6 months to find that deal in terms of the loan, then it takes you another couple of months to find that property deal. You might have missed out on that capital growth.
So true. And also in the time that it takes to do all that, if you invest that time in one person and one mortgage broker, you end up building a really good relationship with that person. They understand you, you understand them. The working relationship starts to flourish and grow.
Relationships are key, and build them over time, and, build that rapport and constantly be in contact. It's probably a good message for myself, and just a really good reminder for me to be in constant contact with the people on my team. And not that I don't do it already, but it's just, wanting to have those reminders all the time that you are doing those things.
I reckon that's your next T-shirt there, Luke, the one not with patience. Next one's constant contact and relationships.
Absolutely.
Well, the black T-shirt's really working for me nicely. It's good. Let's talk a little bit, Luke, about your portfolio. Started out with 2002, 16 years ago, and then it grew from there. Talk us through that growth.
Yeah, I always thought in the back of my head that I wanted to do something different than work in a 9-to-5 job all my life. Funnily enough, from whatever vision that I had back when I was like in my early 20s, that I would retire at 35, and and then knowing that the year I turned 35, that it actually happened, where I got out of my full-time job, not retired as so much, but actually took the step to work on my own and do my own thing. And it's funny how these sort of things work sometimes. But early on, I just didn't know how that was going to happen or what it was going to be about. Had a really strong interest in property, but it took me probably about 10 years to realize what I had to do, because seeing all the mistakes that I made in my first property, I knew that I had to do things differently. And that was the crucial thing for me, is just how am I going to do it differently? I keep hearing those words, is invest in yourself, invest in yourself, invest in yourself. So they rang true to me. I started reading some emails, reading some books. Steve McKnight's book is probably the first one that I read in terms of taking me to that step of actually thinking about property in a serious space, and then actually doing some courses. So that's what really propelled me. I really grew things for myself in working with other people in terms of vendor financing. It's not something that a lot of people know about, but it's where we're able to place people in a house on a payment program, where instead of actually going to the banks direct, where they actually will pay us a small deposit, make payments over a course of 5 years or maybe longer, and then look to refinance out with the banks or with the lenders or traditional lenders down the track. So that's really what propelled me to move forward with my property portfolio and doing courses, meeting with people, doing joint venture agreements with other people who work within vendor finance. So that was a really big push for me to get things moving. It provided some really good cash flow, and then some really good benefits for the people that move into those properties, because they got the capital gains out of it as well. So it worked really well. Then I found to a point where I had the cash flow coming through, which was really strong, and I knew that I had to maybe balance things out a little. So I was like, okay, well, what else? I knew that the market in Sydney was going really strong. I wanted to look interstate, and I kept hearing about Brisbane and how the market is looking upwards there, and there's a lot of infrastructure being spent. There's people moving up to Brisbane, and the growth looked to be there in future. So, and then it was just taking that next step of purchasing those buy and hold properties and looking to grow that portfolio from there.
That vendor financing is an interesting concept. Did you get into that quite early in your journey? Yes, I did.
It was property number 2 that I got involved in that, and It was on the back of a course that I did to learn about the concepts of it and how it was going to work. There's a big push and thought process behind the whole idea about cash flow. And it was definitely a concept or a strategy that allowed for to develop cash flow in your portfolio. And people always talk about how you benefit or you're able to replace your income, and that's a way to think about cash flow deals. It's really been helpful in growing my portfolio.
Let's talk a little bit about that, actually, because you talked earlier about balancing the portfolio and having a good balance in the portfolio. How important is cash flow in a portfolio, and what does it look like in yours?
Cash flow is very important, because then you got to be able to pay your expenses. You got to be able to pay those loans, the property managers, and so forth. So it is important. I typically think, and over time, for me, capital growth is probably what propels you, and cash flow is what maintains you. So, that's why I started to move towards, I knew that the vendor finance deals that I worked with were only going to maybe last 5, maybe 3, 5 or 7 years. There had to be something that's going to replace that. And you don't know what's going to happen in terms of finance down the track, or be able to the ability to get any money. So building that balanced portfolio really helped me to shore up both areas, cash flow and the potential for capital growth down the track.
And talking about balance in your portfolio, I would imagine with a portfolio of 30 properties, there's lots of moving parts to that. Let's talk a little bit about your portfolio and what it looks like, where it is around the country. Let's start there, actually.
Sure. I had a couple of properties in Sydney. The vendor finance deals that were completed. We had a principal place of residence also in the inner west of Sydney, which about 18 months ago we sold. So now renting, which is Rentvestor. So, I like to practice what I preach in that regard. So, got out of the Sydney market when I felt things were high. And then looking back now, it's been it's a really good win that I've had, because that same property is probably worth between 100 and 300,000 less than it was, back when I sold it. So
good timing. Really
good timing. Yep. Sort of fortuitous, but you make your own luck, right?
That's it. Yep.
And moving out from there, a property in Wollongong and the Central Coast, a few properties in those two locations, and then a few properties down in Victoria, one closer to the city, and then 2 others in the outskirts, Geelong and out in Melton South. And then moving from there, one in Western Australia. Also a lot of those are vendor finance deals. And then most of my buy and hold properties are up in the Brisbane area, which I've been purchasing over probably the last 4 or 5 years now.
We're doing a lot of stuff on SPI at the moment around Brisbane and Queensland, Sunshine Coast, even further up into Cairns, people are talking about. And also WA, Perth looks like it's starting to come on stream a little bit. Putting your buyer's agent's hat on and your investor's cap firmly on already. What's your view on those 2 locations, those 2 states?
I think when it comes to investors, they've got to think about, first and foremost, because we don't know how the economy in Australia is going to look, how the global economy is going to look. I always like to look in the way of where is it going to be the best place for you to minimise your risk, first and foremost. And then looking at the markets of Sydney and Melbourne right now, because they've grown so much in such short amount of time, it feels like there's a lot of risk in investing there right now. So that's where I just think, okay, where are the people in Sydney and Melbourne, where are they going to live if affordability is an issue? And we keep hearing that in the media a lot about affordability. And if you think about some of the other markets that people in Sydney and Melbourne, because it's the most populous areas of Australia, where are they going to move to? Are they going to move to Tasmania? Are they going to move to Adelaide? Or are they going to move to Brisbane or Perth? And for me, if you probably ask maybe 8 out of 10 people on the streets, they'd probably say Brisbane. Warmer climate, and there's a lot being spent in infrastructure and a lot of other factors in terms of why, as buyers agents, we're picking those particular areas to invest in right now. So that's probably the pick in terms of where we're looking at right now. And so first and foremost, it's minimising the risk, and then looking for the potential growth on the back of some of the research that's been conducted around around infrastructure, the interstate migration and so forth.
Earlier you said cash flow, capital growth, maintain and propel the portfolio. What's the end game for you with your portfolio, and how much of that is around capital growth and propelling it, and how much of that is balancing out cash flow to maintain the vision?
I think the property for me is just a vehicle. So the vision is, totally away from, property as such. But, the vision for me is to be out there. And I think, when we think about our lives and it's on the back of, how do we become fulfilled? So fulfillment's it's a big one for me, and how we often are fulfilled when we're helping others. So it comes in the spate of actually thinking about how I can create something or create wealth to then help other people. And I think because property is such a passion for me, then I think in the property space, why can't I put myself in a position where I can help multitudes of other people be successful as investors? And then if they're able to move forward with building that wealth themselves, maybe they can pay it forward to other people. So it's a big factor for me to see if I can create something that will really be able to have, multiple generations or multiple people paying it forward to other people. So I think that in a space of potentially in education, in having the services of the buyer's agency, and also maybe in future, and what I'm working with a couple of people now is in a financial aspect as well, and maybe giving them the ability to get started with, assisting them with, some financial help early on in their journey.
To get started. Luke, just in terms of helping people, I guess top tips, absolute must-dos, absolute mustn't-dos, things that you learned along the way. To those that are starting out, either very, very small portfolio, want to move on, or without a portfolio and wanting to get started, what are the, I'm going to say 3, there might be more, there might be less, absolutely must-dos for those people that you would tell them?
Team of experts. You definitely want a strong team around you. It works, the value in a team, you probably can't see on a piece of paper, but it will be significant for you down the track. And maybe deal number 1 might not be the best deal in the world, but deal number 15 will be. So team of experts is definitely number 1. It's also about for us individually taking action. So maybe you bought that one property, maybe you haven't bought a property yourself, but taking those steps, action is a key. And then, as my t-shirt said, as you said, patience.
Love the t-shirt.
Yeah, it is all about having some patience. So I like to use that little bit of an acronym of TAP, so team, action, patience, and just basically, turning on the tap in your life, really. I know it probably sounds a little bit...
I like it. No, yeah. I like it, yeah. I believe it. I mean, it does sound a bit like that, but it's also true, isn't it? I mean, because if you don't do anything, you don't go anywhere.
And I think that's where, maybe some property investors get it wrong sometimes. Going back on the last point of patience is, where markets don't move often don't move in 3 months or 6 months or 12 months, and people are expecting to make money overnight. So, so we just need to have that patience along the way.
You said something earlier about even if the first one's not a great one, the 15th will be, or one in the future will be. I remember hearing somebody say some time ago that you have to build a bad house before you can build a good house. Does the same apply to property investment?
I just think the learnings that you can take from your experiences. Sometimes our struggles are our best points in our time when we learn so much. And I don't think there's a property investor out there that hasn't had a bad story. So even all the experts that you see on TV, probably Phil talks about them a bit in his portfolio. And other experts that have been doing it for 10, 20, 30 years have all, got a horror story in their portfolio of something that's happened that hasn't been quite working to the way they like it. So I think people are so fearful of those pain points or the struggles, but we need to almost embrace them.
So the absolute must-dos, TAP. The absolute must-avoid, the don't-dos.
Don't-dos? Don't try and do it on your own. Like you're spending so much money. That's a lot of money. There's a lot of debt, even though I love debt, but there's a lot of debt. involved, you just really want to get experts to help you along the way.
It sounds like with the experts and particularly when you put it up against debt, having the experts around gives you that peace of mind that allows you to get a good night's sleep, that allows you to make good decisions, and then probably allows you to make good decisions and grow and take it in the area that you want to take it. Absolutely.
I think it's a good sounding board. So if you're questioning things in your own head, you've got someone to call. And that's the beauty of it, of having someone by your side all the way through the journey.
Luke, it's been a real pleasure having you in the studio today and talking us through your journey. As I said, the words patience are staring back at me the whole way through this, and it resonates. And when you talk to me, I can see that in your face and your demeanor that you really are comfortable around what you're doing. You've got a good sense of understanding of it, and the thread that runs through all of that is just a patient understanding that I'm on the right track, and it's all going to work out well in the end.
Thanks, Tim. And for me, it's a way of life.
Luke, pleasure to have you on the show today.
Thank you.
One. Cheers. Now, remember to follow us on all the social media stuff, Twitter, LinkedIn, and Facebook. If you've enjoyed today's show, please leave us a 5-star review on iTunes. It is, of course, the best way for new listeners to find us and for them to get the great content that we put out here. As always, smartpropertyinvestment.com.au is where you'll find us. There are plenty of stories there on property investment across the whole of Australia and on my guest today, Luke Moroney. Thanks for tuning in, and we will see you next week. Goodbye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.